$5 million salary per annum, a great lifestyle or a rich lifestyle, and the food on the company is expensive and stay on the company is expensive. This is what when you think about the investment banking job. But how to get these jobs, and apart from that, how to acquire the technical skills regarding these jobs. So in this video, we are going to discuss about the financial modeling skill of the investment banking job and how to excel this skill for your upcoming interview. So we are coming with a number of the templates regarding the investment banking financial model, and apart from that the full tutorials regarding the investment banking interview questions. So stay tuned, and we'll discuss about the different parameters of the video, and apart from that the different parameters of the particular profile. So in this playlist we are going to discuss about the each and every template of the investment banking and the type of the financial model we generally use in investment banking, with the preset template of the particular financial model, and we share the template with you as well. So stay tuned and see the next video shared by my friend in this video itself. So is the second part of that, and we have the 100 plus part regarding this video will coming in the next few days. So stay tuned and subscribe the channel. Hi guys, welcome to the in this video. This is the part 2 of the LBO modeling, and let me discuss about the remaining schedule for the financial model. So in the last video we discussed about the revenue buildup. Then in this video we are going to discuss about the cost sheet. So cost sheet related to the revenue and what is the costing of to earn that revenue. So this is something like that. Let's sale. This is the total revenue of a company. Then we have the direct cost. Let's say cost of material consumed. So this is coming from the income statement, and we define the percentage of this. Let's say cost of material consumed is 60% of the total revenue. So this is one, and now this is 63, 60, 66, 62. So these are the assumptions for that. Then we have the total direct cost. So this is related to the material consumed. Then we have the total indirect cost. So this is the selling, general and administration expenses, and these are the below the GP, apart from the cost of material consumed, etc. So these are selling, general administration expenses, apart from that rent expenses and the other office administration expenses. So this is the percentage of sales. Let's say number of the expenses divided by the sales. So this is the percentage of the total sale. Then we have the total indirect costs. So these are the total indirect costs of a particular company. Then we have the total cost of the company. So these are the direct expenses or the indirect expenses. So these are the total expenses of a particular company. So in this cost sheet, we'll define this. Then we go to the next schedule, is the working capital management. So how to define this? So this is mostly related to the balance sheet and how many items are there and what is the sum of the current assets and current liabilities. So let me discuss about this. So this is the current sales of the company. So this is the net sales of a company, and apart from that is the cost of sales is excluding the depreciation amortization expenses. Then we have the working capital balance with a short-term investment, merchandise inventory, asset held for sale, account receivable, prepaid expenses, preferred income taxes, and total non-cash current assets. So these are the something like that. So this is the total current assets, and we define this on the basis of different parameters. Let's say we have the total current asset for short term is a 10. Then we define this on the basis of the average or on the basis of related parameters of that. So this is the percent of sales of the short term investment. Then we find out the average of this. So it's a 0.30, and if we find out the average of this, it's a 1.40. But we take this on the basis of 14 as a base, on the basis of 2014 as a base. So this is 1. And then we have the merchandise inventory. So it's a 40 days. This is one coming here. Then we have the accounts receivable. So it's 8.16. Then we take the reference as a 8 for the next coming years, and these are the prepaid expenses, and this is the preferred deferred income taxes. Then we have the account payable. Let's say account payable is there. Then the note payables and the accrued compensation, etc. Accrued rent and the accrued income and other expenses, and these are the unnamed gift cards and current portion of the deferred assets and other liabilities. Then we have a depreciation schedule. Let's say depreciation is based on the different parameters. So this is based on straight line method. Let's say this is net sales of a company. Then we have the capital expenditure. So how much capital expenditure we are going to put in this year. So this is the 5% of the particular sales of the period. Then these are the beginning period, opening balance plus addition of a company. Then we have the minus depreciation. So this is the ending P&L value. Then we have the total capex of 1497. Then we define it. What is the proportion of asset? 1.39 per 6, 4.1 or 18.9. So this is one. Then we have the breakups. So what is the breakup for land? Let's say 166 is the total capital expenditure for the 2015. Then we have the breakup for this 2015. Then we have this for building. Then lease had improvements or furniture and fixtures. So this is one. Then we have the useful life. Let's say 25 years the useful life, and the building is 143.5. Then we divide it on the basis of different parameters or on the basis of different alongside the parameters. Then we have the capex expenditure. On the first year we take the average of this because we don't define the numbers of the period for this. Let's say we are taking this on the average basis. So let's say depreciation, we will do this for the every event of the asset transaction. So this is the total depreciation expenses. So this is something we will do to that. In the next video we'll discuss about the another schedule of the LBO model. Stay tuned and subscribe our channel for the more video. Let's meet in the next video.